Every video I tell you that once we hit the first target, we will follow stops until the market takes us out. What does that even mean? Well, stick around and we'll talk about it. Hi, this is Tim from TradingStrategyGuides.com. I got lots of great responses from you guys about your goals for the new year. That's awesome. Now, it's time to determine the steps involved in reaching those goals. The more you break it down, the easier it will be to follow and continue to progress. Now I want you to do this. Take one or two of your goals for 2020 and tell me what steps you plan to take to get you to that goal by the end of the year. Put your answers in the comments below. I'm still looking for a trade setup that we can use for an options trade. I'll keep you guys posted about that. Now, I tell you in every video that we'll follow stops on the second half until the market takes us out. What does that mean? We'll talk about that and different ways you can trail stops. Plus, I'll give you a couple of warnings about trailing stops that you should know. I'm also going to show you a nice setup on the cryptocurrency Litecoin. Oh yeah, and there's this cool newsletter I'm really excited about, and I want to show you guys that too. Be sure you don't miss it. Once again, we've got a number of charts to look at today, so we'll take care of that first. Then later on, today's trading maxim from a television celebrity. It's Monday, so let's have some fun. Remember to click the subscribe button and hit that bell so you won't miss any cool stuff about trailing stops. All right, let's look at open trades. I'm still waiting for this US dollar Mexican peso weekly setup to drop down here and hit our first target. I keep mentioning this so you guys don't forget about it. Actually, it's so I don't forget about it. The Euro Swissy hit a really low on Friday right here, then retraced most of it. Today it pushed down and is retracing most of that too. So you can see there's a lot of resistance right down here with all those wicks. I'm glad we got our first stop. Still waiting for the Parabolic SAR to catch up and drop below our current break-even stop so that we can start following our stops down. We'll just have to keep an eye on it. I warned you about the Kiwi Loonie on Friday, and it's played out nicely. So we entered right here at 86.66. Stop loss is 87.49. First target 86.11. I'll be closing half the trade at the first target, and we'll trail the stops on the remainder. Bitcoin could be ready for an upward move. It's breaking the top of our wedge right here. I expected it to drop a little bit further down in here somewhere, but obviously it didn't. If it keeps up this week, then we'll get our signal on Friday, because the plan is to buy a weekly close above this bullish wedge. To be sure everyone understands this, we're going to buy this just ahead of Friday's close if it stays above this wedge right here. Okay? I'll link the trade setup below so you can refresh your memories. You may remember on this pound Canadian dollar, we took it long right here. We closed it for a loss on the pullback. And I'd say that was a good move. It's pushed down a little bit. Might be headed back up right here, right now. Anyway, I just want to make sure that you knew I was looking for another close above the 20 EMA here to get long according to the moving average cross strategy. I'll talk a bit more about that strategy shortly. Okay, the spot gold weekly chart. You may remember that we had this resistance right here at 1526, and we got this close above it last Friday on very weak volume right here, so did not enter this trade. You may remember I mentioned on Friday, I believe, that if we didn't get sufficient volume on this candle, that I would move the resistance level up to the top of that candle. I've done that. 1555 is our new resistance. We've got a break above that now. Again, it's on small volume, but still very, very early in the week. So we're looking for this to close above this level Friday, and just ahead of Friday's close. We'll take a look at it. If we got sufficient volume, we will buy this. Just be sure that you have sufficient volume before you enter it. And lastly, the Euro Japanese yen trade setup that I showed you in mid-November could trigger this week sometime right here. It's attacking the bottom of this bear flag. We're looking for a candle close below the bear flag, so I'll link the original trade setup video below in case you missed it. Okay, let me tell you about this cool newsletter that's got me all worked up. Hey guys, the founder of Trading Strategy Guides, our fearless leader and my trading coach, Casey Stubbs, has started this great weekly newsletter. I got myself signed up for it, and I think you guys should do the same. It's jam-packed with wisdom and news that's important for traders and investors. I think it's pretty awesome that it starts the new year with wisdom from Ben Franklin. Then some great information down here about leadership, and a story from Casey, and some trading wisdom in the form of a short story about the Hunt brothers and their attempt to capitalize on silver back in the 70s. This newsletter fits so well with my trading psychology, I just can't stand it. I know I'm going to look forward to this thing every week. And it's free. I'll give you the link below in the description so you can sign up for it. You'll get this goodness every Wednesday morning at 9 a.m. I know I can't wait. Okay, before we talk about the Litecoin trade setup, let's talk about following stops. When I say I'm going to follow stops and let the market take me out, what I'm saying is that I'm going to move the stop loss on the second half of the trade as the price moves in my direction. So if the market begins a pullback against my trade, it will hit my stop loss and close my trade in profit. In the past, we've discussed several ways of doing this. There are advantages and disadvantages to each way. I believe that in the long run, the results from each of these ways will be similar. One method may take you out of one trade too early, but on another trade it may be just right. The market's moves are not completely unpredictable, but you can really only predict them statistically. You can't try one method, then another, and still another, and say one is better than the other. You have to backtest each one using the same entry and targeting methods and see statistically which one gives you the best exits. I'm going to show you two ways that I use, and I'll tell you about a couple of other ways. One I'm testing that was suggested to me by a subscriber to this channel. The first way is the one I'm most comfortable with, but may be tough for new traders because it involves watching and anticipating price movement. Plus, it's more subjective than the other methods, making it a whole lot harder to backtest. I'm going to demonstrate on this Google chart because it's in a nice uptrend. This is totally hypothetical for demonstration purposes. I don't want anyone to ask me what my entry criteria was because I'll just tell you that I just decided to buy it right here for demonstration purposes, okay? Okay, so let's say that we bought right here on the close of this candle, and that's our entry point. Let's say our first target is here and our stop loss is here. These are just purely arbitrary locations, okay, for the purposes of this demonstration. Okay, so price moved along and then it pushed up and hit our first target on this candle right here. At that point, we'll move our stop up to the original entry location or to break even, as I usually say. Now, where do we go from here? Okay, let me clear off some lines and move these around. Okay, now our stop loss is right here, right at our entry point, okay? And I'm just going to move this out of the way for right now. So as you can see, price moved up to this point right here, and then it pulled back to right here. So what I'm going to be doing at this point is watching for it to make a higher high above that level right there. And you can see it does that right here. So at that point, I'm going to move my stop to just below this swing low. How much below? Well, it depends on what time frame you're looking at. We're looking at a daily time frame right here, right now. So I'd probably put it about 10 points below that swing low. Now I would hold that location as price pulled back to here and then pushed up, and I would be watching for it to make a new high above that right there, which it does right here. So at this point I would move my stop loss up to just below this swing low here. So let's do that. Now price comes up, makes a high right here, and pulls back to right here. So now what do is I look for it to make a new high above that point, and then I move up to below the swing low just behind that new high. So now we're going to move our stop up to right here. Okay, now this is where it gets a little bit tricky as to exactly where we get taken out, but as you can see, price moves down to here, and it may or may not have actually hit our stop. If it did hit our stop, of course, we'd be out at that point. If it did not hit our stop, then as it pushed up here, I would look for it to make a new high here. Well, obviously it did not do that, and it pushed down, and if it didn't get our stop here, it would have gotten our stop right here. So we would be out at about this point, which if we measured it amounts to roughly $80. Okay, and we would be out of this trade. Now that's how I would follow stops manually. Well, let's take a look at another scenario here. Let's put these back where they were, and let's turn on the Parabolic SAR. Now this prior method was actually pretty simple, but it is very subjective, and it may be tough if you're not used to reading charts. This one I'm going to show you I've been using for the last few weeks in the videos to make it a little bit less subjective and maybe a little bit easier for new traders. So the Parabolic SAR is an indicator that's typically built into whatever platform that you're using. In this case, TradingView has it under Indicators, Built-ins, scroll down to PSAR, Parabolic SAR, and there it is. Now I adjust this a little bit by changing the start and the increment to 0.01, and the result of that is it doesn't move quite as quickly. I think the default is 0.02 and 0.02, and you can see the effect that it has. It moves in more quickly, which may get you a little bit more profit, but it will also get you out of some runs that you may not want to be out of. Sorry, that was 3. Here's 2 right here. Okay, this probably would have gotten us a few more dollars than the other one, but I like to use 0.01. Experiment with that. That's one of those things you need to back test, satisfy yourself that it's working. But in this case, let's look at this trade again. We enter the trade here, it pushes up, hits our target here. At that point we move our stop to break even. So let's do that. Now our stop is here at break even, and I'm going to leave it here until the Parabolic SAR catches up. Now obviously when we hit our target, the Parabolic SAR was still above the price. It pushed up and it put the Parabolic SAR down here on the very next candle. So we're going to wait several days for this to get up to here. At this point, each time one of these points appears, we're going to put our stop on that point. So on this candle right here, our stop is way down here. Now if you'll remember, our stop when price pushed up above here was moved up to here. So if price were to turn quickly right here and push down, we would have gotten more profit on the other method of following stops. But this is a good example of where the PSAR is pretty similar to the others. Now on the next candle, we'll move up to that point. On the close of this candle, We'll move it up to this point, and so on until we finally get it up on the open of this candle. It would have pushed up to probably up in there somewhere. Okay? Then this candle pushed down and took us out. You could measure that just like we measured the prior one. And you can see that we made a little bit over $80 on this. Maybe 81, depending on exactly where that PSAR point was actually sitting. Okay? Now, this makes following stops a bit less subjective. When your trade hits the first target, you move your stop to break even. Then you leave it at break even until the PSAR gets above that level, and then you just put your stop at each new PSAR every day. In the case of a daily trade, every bar if you're trading some other time frame. Now, I'm not going to demonstrate them, but I've also used the Heiken Ashi candles as an exit indicator. You can find them right here. Heiken Ashi. In the case of Heiken Ashi, if we closed here, then we would have closed the trade on this red candle right here. So this Heiken Ashi was a little bit more reactive. I also had a subscriber to the channel suggest using the Relative Vigor Index, or RVI. I believe I found the RVI here. I haven't done a lot of testing on it just yet. Relative Vigor Index right there. Now the Relative Vigor Index is two crossed lines, so when the green crosses to the downside, that is a sell signal or a get out signal. So that would have probably gotten us out somewhere in here. It looks like it might have reacted more quickly than Heiken Ashi, but you don't know. But like I said, it depends on the price movement. This is a pretty hard uptrend, but there are definitely breaths or pullbacks in between that certain indicators may react to and others may not. This is one of the reasons why I'm still a little more comfortable with following the stops manually than I am using these other tools. That way it takes, to me, a little bit more of a serious pullback to take us out of the trade. Okay, now I mentioned some caveats about trailing stops. The first one is you're not going to catch the peak of the move, and you have to be all right with that. This Google chart is a great example. The price actually moved way up here, which is actually $40 above that level. So instead of 80-ish, we would have gotten 120-ish up here. Now that's a significant amount. What if we looked at this move right here and decided that we're going to close there because it was a huge profit? If we had done that, we would have missed the whole rest of this move. Or what if we decided to get out here? Well, that's kind of actually may have been better than where we did get out. But we had no way to know how far up this was going to go, right? I mean, we can look at this in hindsight and say, well, it was stupid to get out here because look where it's gone now and look what it's doing today. So if we were still in this trade, we would be up, $183 right now on this trade. You just never know. We also may have gotten caught up in the situation. That's actually my second caveat. Sometimes the market is just going to mess you up. Here's my example. You guys that have been with me for a long time may remember this one. This dates back to early July. We were trading Tesla from this continuation triangle right here, and our entry was on this close above the continuation triangle. We went long. It pulled back on the first day, and the next day it hit our first target. We closed half, moved our stop up to break even, and then price moved and moved and moved and moved, and I kept trailing the stop up, and this last move had me locked in here, $19, which was roughly about a 4% gain on this particular move. And it was looking good, and it was looking good, and I was going to close it before the earnings statement came out, and for some reason I didn't get it closed in time. I thought the earnings statement was coming out late in the day. It actually came out early in the day. Honestly, I'm not sure exactly what happened here, but you can see that the earnings statement was very negative. They were looking for earnings of minus 35 cents. They ended up with earnings of minus $2.31. So the surprise was minus $1.96, and the market reacted hugely, big volume with a huge drop, and it opened the next day way down here. Well, guess what? It never went through my stop. It just closed here one day, opened here the next day, and of course the trading platform said, oh, well, that's below the stop, so I'm going to close this trade right here. So I got stopped out for $3.40 instead of the $19.08 that I had locked in. And of course it could easily have opened way down here and I would have been eating it. So I did get out with my skin intact. So there you go. The rule is do not hold over earnings statements. I hope you enjoyed my doodling. Okay, time to look at the Litecoin trade setup. Litecoin is showing a very nice moving average cross or MAX strategy setup. The 20 EMA right here is below the 100 SMA, so we can only take sell signals. The price has moved above the 20 right here, so it's poised to give us a sell signal by pushing back below the 20 EMA and closing down there. So here's the trade plan. We will sell a daily candle close below the 20 EMA. On the breaking candle, to enter a full-size position, we want to see the volume bar reach up as high as the volume average. If it doesn't quite reach the average but does reach 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average. You should get 0.75 or greater. If you don't get at least 0.75, stand aside on the trade. The stop loss will be 1.5 times the ATR. Your first target will be 1 times the ATR. So let's say this candle crosses the 20 and closes right here. That will be your sell signal and your entry point. On that day, you'll look down here at the ATR. You'll multiply that by 1.5, and you'll measure that distance above your entry, and that'll be your stop loss. You will then measure 1 ATR below your entry, and that'll be your first target. If after entering the trade, we get a candle close back above the 20, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout below the 20 EMA should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now these two rules are the very definition of cutting your losses and letting your winners run. Typically I do this using 2 positions. The first position has a stop loss and a take profit, and that position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on this trade. And that's the setup on Litecoin today. Remember what I've said several times over the last couple of weeks, trading can be whippy due to low liquidity for a few more days until everyone is back at work from the holidays, so be careful and follow your rules strictly. Things should be back to normal by the end of this week. Also remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, we've got a paraphrased quote from a reality television celebrity. Tim's trading maxim number 46. No one is born a great trader. One learns by doing again and again. And that's from Chef Gordon Ramsay with a little bit of a paraphrase because he's obviously talking about chefs, not traders. But I am living proof of this, and I'm pretty good at what I do. And that's not a brag. That's just to say that if I can do it, anyone can. All I've got on the others that have failed is that I refuse to quit. I've been at this since 2004. So I had only marginal success until 2010 or so. No, it doesn't have to take you 6 years to learn. I was stubborn. I've always been able to learn things from books. I even learned whitewater kayaking from reading a book, but that's a story for another day. So I figured I didn't need help to learn to trade. Guess what? It cost me more time and money to go it alone than it would have if I had just gotten myself a mentor. In fact, I ended up getting a mentor, thanks Casey, and inside of a year I was having real success. My point here is, don't give up. The reason that only a small percentage of traders are actually successful is that the others just gave up too easily. What it takes is doing it over and over and over. Another one of my trading maxims is, don't practice until you get it right. Practice until you can't get it wrong. That's how you learn. Remember our daily Litecoin trade plan here. We're going to sell a daily candle close below the 20 EMA. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And also remember to sign up for my Trading Picks email list to be sure you don't miss any of these great picks. I send out 3 or 4 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. And don't hesitate to ask any questions you may have. I'll either answer your question right in the comments, or in a training video, or both. And remember, the only stupid question is the unasked one. Once again, remember, I want you guys to talk to me. Let me know the steps you're going to take to be sure to achieve your goals for this year. Make sure you comment below. And don't forget to sign up for the Finance and Markets newsletter. It's going to be chock full of great ideas for trading setups. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great Monday, and I'll see you later this week.